Now, 2024 marked a significant turnaround for South Africa, with improved sentiment after the national election, reliable energy supply, and reduced borrowing costs. To explore how these factors impacted deal making in the country, I'm joined by Andrew Bahlmann from Deal Leaders International. Andrew, thanks so much for your time today. So yes, the environment here locally has improved, but there are still risks at play. Here at home, we're dealing with a logistics crisis and low growth. Internationally, geopolitical risks still at play and political shifts in major economies. With that being said, would you say that South Africa is poised for more deal-making activity?
Yeah, look, I definitely think it is. I think, yeah, look, last year was almost a perfect storm outside of our local challenges with all the elections globally and the likes. But I do think we are well positioned, because I think one thing we need to do more is understand South Africa's profile, if you want, risk and investment profile relative to the rest of the world. And, I believe that gap has closed. So I think more and more, based on South Africa and Africa's, demographic profile, if you like, and the growth opportunities, particularly to a growing middle class, I think we're going to see more and more activity and definitely an increase on last year's M&A numbers, if you like.
And just reflecting on the past few years, Andrew, we were in a period where we saw a lot of M&A activity, particularly in the tech space. While we are dealing with deals in that space, we are seeing a growing interest and a return into more consumer-facing industries as well as mining industries, especially when it comes to critical minerals. Is this just a reflection of, the improving economic environment?
I definitely think it is. I think there's, certain sectors like a tech or fintech or whatever it may be, I think will always be attractive. Yeah. But I definitely, we're seeing it every day. If you look at mining, particularly mining services, I think, based on, obviously the commodities themselves and what those commodities feed, there's definitely a growing confidence in the need to secure businesses that service those commodities. And I also think, from a South African perspective, I think those businesses that can be globally competitive with a rand-based overhead structure also become equally, attractive. So that starts moving more into the industrials and manufacturing side, and obviously services as well.
All right, let's talk about some of the other themes that are, dominating M&A activity.
Yeah, look, I think a big theme that we're seeing is becoming more and more prevalent is ESG. I think, in our world, we deal primarily with privately owned businesses, but we source a lot of buyers from Europe and the US. And I think, although we may not have the same requirements locally, more and more those standards are needing to be, adhered to. So I think that in itself is going to be a really, really big focus area. I think, technology in every business and scalability is becoming a big theme. And again, kind of alluding to what I mentioned earlier, that ability to be innovative in certain industries, as well as those infant type industries, if you like, in Africa itself. And you think along the lines of pharmaceuticals and those components, there's a huge populace, a growing middle class. And I think more and more, that's going to need to be serviced. Obviously, a very, very big area of demand and investment demand is renewables. So that'll be a blend, I suppose, between project finance and M&A itself. But we're seeing a massive, massive push there. So that's, I think, a very, very interesting space to watch as well. And yeah, I think, outside of that, within every industry, there's going to be some outliers and businesses performing particularly well.
Andrew, when we're discussing international investor interest, we often only focus on investors outside of Africa. But what about intra-Africa deals? How active is that space, particularly when, we are trying to push the African Continental Free Trade Area Agreement agenda?
I don't think we pushed it hard enough. I think there are elements of it, but they're definitely the exception. And I look from our perspective, there really isn't enough investment in either direction. So I'm hoping at a trend level, that's something that the collective can push harder, because I think there's definitely a far better understanding of the investment environment and the risk profiles associated with that if we can start feeding it, especially because we do have those trade agreements in place.
Coming back home, regulation is really critical when it comes to deal making. How confident are you in South Africa's regulatory framework, particularly given the Competition Commission's recent interventions, such as blocking the Vodacom massive deal? We also saw them block the Sun International Peermint deal as well.
It really is a tough one. I think it is one of those situations where I think the original mandate has become a little bit skewed, and it's become a real concern, particularly for these large corporates and these mega deals, because we've got to realize that if you've got large businesses, the only way for them typically to grow is to consolidate or acquire other businesses, because that's the only way efficiencies can be passed on to the consumer. So it is definitely a red flag, and I think every deal that we're working on that goes through the Competition Commission as well, the mandate is quite complex now, and one has to tread carefully. And I do worry that, if you take that with all the other risk elements in this part of the world, international investors may see it as an added hurdle, in concluding a deal and deploy capital elsewhere, which hopefully won't happen.
All right, Andrew, thanks so much for your time and just taking us through the M&A activity landscape and what we can look forward to in 2025. That was Andrew Bahlmann from Deal Leaders International.